All right. So, what we're going to talk about today is we're going to talk about the secret strategies that the wealthy use to finance their own deals and how to fund investments privately, profitably, and without outside approval. One of the things that I thought was cool about this interview was that people will say to me, well, Jim, where do I get started? How do I get started? And sometimes I say, you just got to start, right? And that sometimes doesn't make sense to people because, okay, I got to start. Well, what does that look like? What do I do first? All of these different things. And so we're just going to talk about how wealthy people approach some of these deals versus people that just honestly don't know what to do. But if there's fear, if you have this fear of failure, fear of success, fear of being exposed, whatever it is, fear of being embarrassed, I think that that there's ways to overcome that. Okay, so we'll talk about it. But it's the more educated you are, the less fear you have. If you were afraid of heights and you went up to the Empire State Building every single day for 2 months, you wouldn't be afraid, or you wouldn't be as afraid of heights in 2 months as you were the first day. It's like anything else that we do in our lives. The first thing is authority and curiosity, right? Those are two things that you need. And if you think the wealthy are just better at getting bank loans than you, you've been lied to. They don't beg for approval. They don't risk deals on red tape. And what I mean by that is there's another farm that I talked about last week down here in Fort Myers, and there's a letter of intent. Okay, well, how long is the letter of intent? It's got a financing contingency, all of that, right? But the wealthy, they don't risk deals on red tape. They control their own source of capital. So obviously, if this guy that's buying this farm in Fort Myers, if he could pay cash, he would have paid cash, right? If they wouldn't have included a real estate broker, then we could talk about seller finance. But guess what? Real estate agents hate seller finance because they get paid on the close. And if there's not this big close and there's not this big sale, then how do they get paid, right? And there's a lot of things that kind of complicate that. But I've used this exact strategy, and you guys have heard of infinite banking before, and a lot of you guys are clients of Create Tailwind, or you do infinite banking with someone else. But I've used this strategy to buy over 30 businesses and countless real estate deals without a single bank dictating my terms. I mean, and today I'll show you how it works, why JD Rockefeller built his empire on it, and how you can use the power of every other deal-making strategy how you can use it with every other strategy that you've ever learned. It doesn't conflict with any other strategy, okay? So let's first talk about why do we want to have some secret strategy or use the strategy of the wealthy? Like, what's the pain of traditional financing? Banks, red tape, lost deals. You know the pain. I mean, weeks of waiting for approval, loan committees that don't understand the deal, arbitrary lending caps, interest and fees that make them rich. I mean, if you've tried to get a loan, you know exactly those four things that I just talked about. Every time you borrow the old-fashioned way, you're paying someone else to control the opportunity, your opportunity. Think about that. You're paying someone else to control your opportunity. Now, look, don't do that. Now, here's a wealth fact. Banks multiply your deposits by 7 to 10 times through fractional reserve lending. We can't do anything about that. That's how they make their real money. And you can do the same, but privately. Okay, so here's my promise, and here's kind of the roadmap, is 3 steps to capital control. Become your own banker with a wealth engine. And I'll talk about what that means. Plug that engine into multiple wealthy financing strategies. Multiple, that's the key, is if you just try to do one thing and it doesn't work out, then and that's where you get afraid. I'm fear of exposure, I'm fear of failure, I have all these fears because I got one deal. I mean, if you got one pitch to hit a home run, your odds are not very good. But if you have all year to get home runs, then you're going to do better, right? So here's the 3, so you become your own bank with the wealth engine, meaning you become your own banker, but then what do you do with that horsepower. Okay, because you got money sitting in there, and what do you do with it? Okay, that's the wealth engine. That's what we're talking about. Then you plug that engine into multiple wealthy financing strategies, and you earn twice on every dollar while you keep control. Now, what do I mean you earn twice on every dollar? Your money's growing inside this insurance contract, tax-free, guaranteed, uninterrupted, and then you get to go use the insurance company's money to go build assets. That's what I mean by it working twice. And I remember I bought a business that most people would need like probably $500,000 down to buy. And my capital came from my own private banking system, right? Which was my infinite banking policies. And it funded in under a week. Now, if I could have made an offer on this other farm in Fort Myers, and my offer was, hey, I'll fund within a week. And the other guy's offer was, I want to do a financing contingency and go get the money from the bank. Whose offer are they going to take? So when you wonder about how do I get started, what do I do first? Well, the first thing you have to do is have your own bank so that you can move quicker and you can get things done. You also have to know how to ask somebody for some of these strategies. But that wealth engine that powers every strategy is a properly structured, dividend-paying, whole life insurance policy with a mutual company, from a mutual company. And it's an excess for cash value. I hate the word overfunded, but when you put PUA, that's what some people say. But I'm trying to say it's designed for cash value, not for death benefit. And you borrow against the cash value while it still keeps growing. While it keeps growing. You repay yourself with interest, recycle capital, and on to the next deal, right? Banks themselves are the biggest buyers of cash value life insurance bully to secure tier one reserves. They just are. And there's lots of data out there for that. And you can see how much Bank of America, Citibank, all of these companies put in there. So you're going to hear things like private placement life insurance. PPLI, it's like a fancy thing, and premium finance, where a bank will give you a loan to go pay your premiums, and you're responsible for the interest. And at some point in time, the cash value will be higher, and then you start to pay off the loans, right? That's okay as long as interest rates don't go up, and that can really screw up premium financing. PPL really it's really not any fancy strategy, but for the ultra wealth, high net worth people, they hold hedge funds, private equity, real estate, limited partnerships, all on a tax-free wrapper. Premium financing uses other people's money, so we're cool with that. So you could fund larger policies, freeing up your own cash for deals. And then IBC loans can cover collateral or payment or premiums or making the strategy self-sustaining. But what we want is we want it to be self-sustaining and just grow naturally and grow consistently. Might not be the fastest growth in the world. So that's one of the strategies that people use, is some of the premium financing, et cetera. I'm not telling you to go out and do that, but I'm just saying this is one of the areas that they kind of separate themselves. So the other way is through seller financing. And it's funny because people say, well, people really do that? I mean, it happens all the time. On this farm in Fort Myers and the farm in Smithville, Tennessee, the owners have contracted with a realtor. So that makes it a little bit harder because now I have to negotiate through realtors, and the wealthy individuals, they want to negotiate directly with the seller to carry financing. Could be balloons, interest only, flexible terms. Depends on what the company needs, excuse me. But if you need cash flow, then maybe it's a balloon payment or interest only or whatever it is. But you buy, like the other thing that you could do is if you bought discounted notes, you could buy performing notes at a discount for immediate cash flow. You could fund either from your IBC loan and earn interest twice from the note and your policy growth, if that's what you did, is buy a note. Okay. Now, another strategy is joint ventures and private equity pools. Now, I'm going to bring all this together. I'm just giving you some terms out there, things that are happening. But you could partner with others who have capital, expertise, or deal flow. Capital, expertise, or deal flow. So if I don't have capital and I don't have expertise, what's one thing I can go do? Find deals. And you fund your equity share through IBC, keeping repayments inside your banking system, not somebody else's. And this is how family offices syndicate deals privately. And for people that don't know what a family office is, when you have really a ton of money, you have like a family office that runs, it could be your accounting, could be in your investing, could be all these different things, right? So that's really important. Wealthy people get creative about real estate financing. Everybody else that's not wealthy, they think, well, I got to have this down payment. I go to the bank. Maybe the bank's going to give me the loan, maybe they're not. But creative real estate financing, things the wealthy people know how to do, is assumable debt. If it's a commercial, multifamily, then you can sometimes assume that loan. Now, you can't on a mortgage, and you could do what we're going to talk about next, but you could step into a low rate mortgage from a seller if you could assume the debt. So let's say you're going to go out and you're going to buy a company, and the company has $500,000 of debt, and you can definitely use that money to, or you can assume somebody else's loan, which would actually make that project worth more if the interest was low enough, right? Everybody, not everybody, but if you've gone around real estate or you've been around real estate at all, you know about subject to deals. So you control the property without triggering a new loan, right? They turn over the deed subject to you paying the mortgage. Now there's a lot more to it than that, but that's kind of the strategy. So if somebody right now had a 2% mortgage, and you could go out there and you could pay that mortgage instead of going and getting a 6 or 7% mortgage, well, you'd be better off, right? So that's another strategy. Value add and refinance. We had John Stevens on a little while ago, and I've used him as an example, but you buy a distressed property, you improve that property, you refinance it, you pull out the equity tax-free into an IBC policy for the next deal. Okay. So that's some of the kind of creative real estate financing. On tax-driven capital access, you could do a charitable trust with wealth replacement. It avoids capital gains tax. You replace the asset value with life insurance. You could do donor-advised funds, create big deductions in high-income years, free capital for investing. Again, is there a risk? Sure, there's risk. But let's just take a real life example, and let's go all the way back to the beginning of becoming your own banker. In the 1980s, Nelson faced $500,000 in real estate debt at 23%. No bank's going to help. They can't help. How are they going to help? His personal banking system funded the payoff and the rest of his life's deals. This is how infinite banking got started. This is how he started writing about it. It was out of necessity. It was out of pain. It was out of adversity. Wealthy don't run from that. They know that's part of the deal. Failure is part of the process. You're going to fail, right? You're going to have deals like Nelson on his knees praying at 3:00 in the morning, God, show me a way out of this. And God did, right? All right. Here's a mantra for a Rockefeller style of banking. Own nothing, control everything. Now think about that as far as trusts, etc. The Rockefeller family trusts and entities acted as lenders to themselves. They still do today. The interest stayed inside the system. It was a closed system. So how does all that money flow to somebody else? It doesn't. How does anybody make money off of you? They don't. So they kept massive reserves for downturns, for buying distressed assets while others begged for financing when the banks weren't interested in loaning money. And your IBC wealth engine is your modern day Rockefeller trust. Private, liquid, under your control. Okay, so and I've quoted this a few times, but J.D. Rockefeller said in his book, 38 Letters to My Son John, is the banks were the biggest hindrance to him becoming the richest man in the world. But he's writing these kind of later in his life, and he said, and then I became the bank. That's what we're talking about. They after a while, they didn't rely on outside loans for their empire building acquisitions. They recycled internal capital. Okay. So here's another example is there was a client that started with like $25,000 cash value. They did a 1035 exchange, so they had more money in there. But from the first policy, they only had $25,000 of cash value the first year. 5 years later, they had 250,000 because of the 1035 exchange and getting them out of a company that had horrible lending practices, interest rates, et cetera, and payback. And they funded 3 flips, a rental portfolio, part of a business acquisition, like bought part of the business, all without a single bank loan. Now her system generates capital on autopilot, which is what we all want. All right, what's the scarcity or the poor objections to this strategy of using infinite banking and buying cash flowing assets? Whole life is a bad investment. Only if structured up for commissions, it is a bad investment and just sits there and it's not structured for cash value. But if it just sits there and you don't use it, then it's just like it's not the worst thing that could happen to you, but it's not what we're advocating for. Putting that money in motion and having your cash value work for you is key. Another objection I hear is I don't have that much money to start. You start where you are. Your system scales. There's a book called The Science of Scaling by Benjamin Hardy. And it's actually a really great book because he just gives you some system on how to scale. Start where you're at and then scale. I don't care if you start with $5,000 a year, $25,000 a year, whatever that number is, right? $10 million a year. If you're still thinking scarce, I'm just kidding. 10 million would be a good start with. I wish I had 10 million, as far as cash flow that come through your system that your tenants and your customers could fund your banking system. But banks aren't in the real estate business. They're in the money business. It's time you were too, right? Even if you say I'm a real estate investor, are you in the money business? And if you want to book your banking opportunity assessment, and you can do that, you can reach out to Nick Costco at createtailwind.com or Kyle Reese at createtailwind.com, and you can start that. And in 30 minutes, we'll map out for you a private banking strategy that you can know where the money's coming for the next deal. We have this stuff online on the community, and that deal, and then every deal after that, because the money is going to flow back in. And so, the key thing is with all of these strategies is who controls the banking function. Who controls the banking function in your life? Do you or does somebody else? And if somebody else does, then that's a problem, because whoever controls the money makes the money. And J.D. Rockefeller, the richest man in the world, said, my biggest problem was the banks. So what wealthy people do, the number one strategy is they control the money. Meyer Rothschild said, I don't care who you elect politically. I don't care who's running the country from a political standpoint, as long as I'm controlling the money. Pretty smart guy, right? I mean, if you don't know the story, and I'm just talking about the story, not the story behind the story of Meyer Rothschild, is he took his sons and sons-in-law, because you got to remember when this was, and he appointed them the head of the 5 largest banks in Europe. The 5 largest banks in Europe, controlled by one family. And there's estimates, all kinds of estimates on how much money this family actually has, but it's massive. They were smart enough that they decided not just to control the banking function for themselves to create wealthy opportunities, what wealthy people do, but they wanted to control it for the whole continent. And they did. So control the banking. That's your wealth engine. Find these opportunities, learn these strategies, learn about subject to. What can I assume? What can't I assume? Learn about BRRRR, learn about flipping, because the reason you're learning about these things is you might decide, I don't want to do those things. But you could do hard money lending, you could do all of these things, but it's better and it's more effective and it's more efficient if you do it with infinite banking than without infinite banking. Make sense? If anybody has any questions, I'm happy to answer the questions right now. But one thing I wanted to say is I think I've sent out quite a few books to people. And if you haven't just given me an evaluation, and I want you to be critical. Hey, the story in chapter 3 didn't make sense to me, whatever it is, okay? Or your math didn't make sense to me. Can you further explain that in this chapter? I want criticism right now because I want to make the book when it launches to be the best book possible. So please, if I've sent you the book, please read it in the next, if we could have a deadline of like next week by Friday to get me feedback, which I think would be the 23rd or something like that. But like next Friday, if you can just give me some feedback of what you think of the book. And again, I want you to be critical because I want this book to be really good. And I appreciate everybody's help in reading it and giving me feedback. And, if you tell me a story in there, maybe I'll put it in the final version. Help me figure out how to make this the best book possible. And I need criticism, criticism. I need feedback. How's that? Feedback is better than criticism, right? Okay, so are there any questions about infinite banking, building my infinite banking system? Why I would want to do infinite banking in anything like that, because I'm happy to answer those questions. While I'm waiting to see if there's any questions, I also want to talk about like what are some of the things that I see with people that have a lot of money funding their banking system rather than somebody who's maybe on a little bit more of a tight budget or doesn't have as much money to put in there. What I see is the wealthy people know what they're going to do with the money. Simple as that. They've educated themselves. They know the opportunities. They've been in business, whatever it is. They know what they're going to do with the money. Some people don't know what they do with what they're going to do with the money, and that makes them afraid. And so then they don't take action. And action cures everything, right? I even confirmed that with Jill, who's super educated about the psychology of why people act and why they don't act. But she's also a psychologist of happiness and what makes us happy. Well, progress makes us happy. And I wrote down a couple of notes from this interview, and this is going to come out like next week. So accomplishments equals progress. Progress equals happiness. We want to be happy. The accomplishment and the progress are in the growth. You have to go through adversity. You have to fail to grow. Comfort will not make you grow. If you're not fat, but you're just okay and you're eating whatever way you're eating, that's comfort. You're not going to change your eating habits. If you go to the doctor and the doctor says, you keep eating the way you're eating, you're going to die. Well, now that's a little bit more like, oh my gosh, I better do something now, right? And just remember, when we're doing this, when we're building our infinite banking system, when we're doing all this stuff, failure is necessary. It gets you uncomfortable and it allows you to grow. And so if anybody that wants to look for this book that Jill just wrote, it's not even, she said it was available, but I went on Amazon and it says pre-release August 26th. No, I think August 26th, today's the 14th, so 12 days. Okay, no big deal, right? So by the beginning of in the last week of August or whatever that is, you could have this book in your hand and it could help change your life on how are you going to get through this bravery thing. And if she has like some assessments online, everything else, it's really cool. So just remember, accomplishments equal progress and growth feeds accomplishment. The more that I educate myself, the more I can accomplish. I can't go and buy a bunch of real estate when I don't even know what I'm doing. Like I don't want to make any critical mistakes. I'm super conservative. I know it doesn't sound like that up here when I'm talking about these different companies and everything, but I am conservative in my approach. Okay, so the strategies, just going back through it one more time, is wealthy people control the banking function. As simple as that. And then they can go find deals. And if you can go find deals and you don't have any money, then you're valuable because somebody will fund it. You find the deal for 10%, 20%, whatever it is that you get of the deal for finding it. I'm telling you, there are people out there, you go find good deals, they'll pay that all day long. And they'll be happy to have you as a business partner. So whether you're 25 or 65, if you've got time to go find deals, or you can go through your contacts and think, oh, does that person have this? Is there an opportunity with this person, an opportunity with that person? That's the key. And that's what I want for everyone on this call. So this bravery thing, being a Marine, remember, bravery doesn't mean the absence of fear. It just means taking action even when there is fear. That's brave, right? And action cures everything. If you're not sure what to do, let's grab a book and read it. Let's watch some YouTube. Let's learn about it. I'll give you something with my golf game. This is the subtlety of success versus failure. I went and played golf last weekend up at Valhalla up in Louisville, and I brought one of these young guys from my club here who's a pro. And he's one of the best pros. And he played this course like lights out. And he said to me, Jim, you're standing too far away from the ball. And he sent me a thing from Ben Hogan, Jack Nicklaus, and Tiger Woods that said, your hands cannot be too close to your body when you swing a golf club. It's easier to swing. That's simple. Not easy, but that's simple. And when I started doing that, I was bombing the ball and hitting it more consistently. So you think sometimes you're so far away from where you want to be when you're doing something, and you're just that close. Just stand a little closer to the ball. So today, thank you all for hanging in here. I'm a little bit after 30 minutes, but stand a little closer to the ball. Stand a little closer to being your own bank. Stand a little closer. And no, just remember, don't be afraid. Failure is necessary. Now, we don't want to fail and risk everything, right? But you're not going to do that. You're going to be smart about it. And you're more vulnerable in the beginning than you are 5 or 10 years from now. Why? Because of your infinite banking system, your wealth engine, and the knowledge that you're going to get through our communities and courses and our affiliates communities courses. Thank you so much for all being here. I hope that was helpful. Have a great day, everyone. Godspeed. And if you need any help, please reach out to me and help you any way I can. Thank you.